Yet the market's been up a lot, but these aren't necessarily ridiculously overpriced and overvalued. What do you make of this list?
I agree. I like that list. And Scott, as you know, I own a bunch of those stocks. I mean, I just off the top of my head, I mean, there's Honeywell in there and there's Qualcomm in there. These are really good companies at reasonable valuations. And to Mike's point, yes, you know, we've had this rally off the bottom, and we've had some breath coming back. But if you look at where the breath is coming, so take financials. You know, I have 15% of my portfolio in financials. So when you look at the valuation of financials compared to the rest of the market, it's at a huge discount. It's trading, most of the stocks are trading at book. And what you're seeing is a relief rally, right? You're seeing something saying, you know, Scott, things might open up. These banks aren't going to get hit as hard in terms of what reserves they're going to take. Are the dividends safe? So what you're really coming back is to, you know, somewhere close to where we should be. They're still down. I mean, the XLF is still down almost 20% of the year. So yes, Berenberg's right. There are stocks out there similar to 99. You have to be very careful that you don't get your you don't get burnt buying some of the lofty price to sales, stay at home, this is forever going to be. This is healthy to get a rotation. Yes, we all agree that the market's ahead of itself, but if we're going to reopen and things are going to come back slowly, you want to be in high quality, good companies that are going to grow and not just focus on one sector that's kind of held up the whole market.
But let me push back on you for a second.
And
you just
Scott, one quick second.
Yeah, go ahead, Michael.
Sorry, this is a market, to follow on what Sarat said, that's where FOMO can be really expensive. You know, when we go up this much this fast and you say, geez, I'm getting left out and I'm getting left behind, you start paying the top ticking and paying top dollar for these stocks. That's not investing. You're buying high, hoping for higher. FOMO's expensive and dangerous.
Yeah. Sarat, you said, you know, quote, we all agree that the market is ahead of itself. I mean, everybody must not agree that the market's ahead of itself because the market continues to go up. Okay? So there are a lot of buyers that are still out there. As we said, the momentum appears to be on the side of the bulls relative to how far the stock market has come in a relatively short period of time. And the fact of what LPL says at the top, this greatest 50-day rally in the S&P ever, and the fact if you look at past instances of moves like this, you're higher 6 and 12 months ahead 100% of the time.
Look, I mean, when I say we are all, I'm talking more of our panel right now, saying, look, I think, you know, nobody expected us to get this far so quickly.
Is everybody on the panel? Raise your hand. Let's go. Let's take a shot of everybody. Okay. Get everybody in there. Is everybody selling stocks today? Is everybody a seller? I don't see a lot of hands go up.
So I'm not selling, but I'm not buying aggressively at this point. I was buying a month ago. I was buying 6 weeks ago. I am now keeping my allocations consistent, but I am investing within the allocation. I am not adding new money to portfolios.
I mean, I just gave you a list. Well, you said you like this list, Sarat. But, Josh, I just gave you a list of names. We can go down and pick some of these. I don't know. You think the market's ahead of itself. You're going to buy Apple here, Intel, things like this now?
Well, so, like, I guess define ahead of itself short term and in need of a pullback based on how many stocks are just in these explosive vertical moves. Absolutely. But ahead of itself for an investor who has a time horizon beyond 6 months? Not necessarily. We've seen upticks in states outside of New York, California, New Jersey in cases, but by and large, we haven't seen the types of spikes that scared the hell out of us in March and April, and I hope we don't. And if this reopening continues in phases with social distancing and the majority of people participating and doing what they're supposed to do, and we don't have a resurgence, then, as I said on an earlier show, there are a lot of people who aren't long enough. One other thing I want to point out, for the people on this panel that have globally diversified portfolios, we are finally, for the first time in a long time, having fun conversations with clients about owning stocks outside the U.S. And you always like to see corroboration, a rally this powerful in the S&P. You always like to see it broader than just the top 5 stocks. So forget about how many little stocks are rallying. Let's look around the world. The S&P's up 10% over the last month, Scott, but Germany's up 15% or 14.5%. That's huge outperformance. Granted, it's only 30 days, but it's nice. The Nikkei's up almost 16% in that time. So you're seeing rallies in large cap, growth and value stocks on every continent in developed markets, EM has been on fire at least this week. So you have a lot of corroboration. The names on that list that you were just talking with Surratt about, what they all have in common is they're big global companies. They do business all over the world, and the reopening is not a U.S.-only story.